Good evening, guys. Welcome back to today's class. All right, just let me connect to the chat box. Just a moment. Yes, I connected. All right, we'll start now. So today it was supposed to be the numerical session, I know. Just a minute again. There is some system error. Just a minute. One minute, guys. I'm just connecting. Yeah. Done. Now it's coming. Okay. No. Can't load the link. Queue. 1 minute. Because I'm connecting to your chat box, it's not connecting for me, so that's why I'm just trying that. Just a moment. Just give me a minute. Yeah, it got connected. All right. So it was supposed to be numerical session, but last week we did few numerical sessions, so that's why I thought, okay, let me take you through certain concepts. Then the next class we can talk about few questions. All right. So far I have covered all the topics. In that I didn't talk about funds flow probably because we had too many sessions on cash flow and other stuff. So funds flow it's a similar to that. So I never took a separate session for funds flow basically. But when we solved last class, we solved few questions. So I thought, okay, it would be good that if I do the funds flow basics of funds flow statement or funds flow also because it is one of your chapter in your syllabus. All right, so we'll see what is meant by funds flow and how that is, like like it's funds from, cash flow from operation investing and how funds flow would look like and what is the concept here, what and all you will be learning and those stuffs we will see today. Okay. So first of all, understand what is meant by funds flow. It's nothing but inflow of fund, outflow of fund. That's it. Ma'am, what does it mean? Fund means it is nothing but paisa. Or fund means whatever the sources you are raising money or fund, money is equivalent cash or cash equivalents money. So why I'm not saying the word cash is funds means even it includes accrual concept, not only cash. Remember that. Once I use the word cash, it talks only about the cash, the things which are affected by cash. That's it. Okay. So where there is an impact of cash, only those things will be taken care. The moment I use the word cash. But here I won't use the word cash. Why? Because here I will use what even we'll be seeing the accrual concept, current assets, all those current assets we will be talking about, not only cash items. Remember that. All right, so that's the reason I'm not using the word cash here. So funds flow here, what funds flow means, what is meant by fund here? It is nothing but it refers to a money. All right, it refers to money which we need to run our day-to-day operation, which we need to buy our assets, finance our assets. All right. which we need to meet our obligations and all those things. So funds flow represents what? It shows me the movement of funds. It's nothing but from where the funds are getting generated, from where I am receiving it, you're getting it, and from where I am utilizing it. I'll tell you guys, for you itself, I'm telling you, forget about the corporate. Suppose you are going for a job and you are earning salary. So salary is your revenue from your operational activity month on month. So your only source is only that. You have a credit card. You have a credit card. So what you are doing, whenever you are purchasing, you are swiping it. So remember, even though you don't have literally paisa, cash in your hand, but still you are able to purchase it, then that is a source of fund. You are getting the point. By swiping the card, you are, ma'am, I am incurring liability. Yes, liability is there, I agree. But what are you doing? You are able to purchase there, no? So that's a source, no? From using that credit card, you're able to purchase. So usage of credit card is your source. Purchase of that, whatever you are purchasing, that is usage of fund. You are getting it. So this is source, this is usage. One side is source and one side is usage. So source means from where I am going to generate money. Where I'm going to generate money. It could be from my operational activity, it could be from my current liability, whatever it is, guys. You're getting it. So I have one source, and where I am utilizing it, where I am using it, that is called usage of funds. So inflow and outflow. So when I talk about this movement, okay, then that is called funds flow statement or flow of funds. Ma'am, then what is the difference between cash flow? I'll go to the difference at the end. First, understand funds flow. You will see what and all is covered here. At the end, I will give you a difference between funds flow and the cash flow statement. You're getting it? Now, so what could be the inflow? Where and all you can generate money, money source. You are getting it? That is called inflow. Ma'am, it could be any activity. It could be any activity. You are getting it? It is not only from everyday operational activity. It could be anything. Rising of shares, rising of, capital. Suppose you are issuing shares. You are going for an IPO or you are going for an FPO. You are getting it? So issue of shares. So what are you doing over there? You are raising money there. What is that generic meaning behind it? You are raising money there. Correct. So it is nothing but issue. So it's a source of fund. So it's an inflow of fund to the organization. Correct. The same way issue of debentures. Right. So, ma'am, I am borrowing. Ma'am, yes, you are borrowing, Baba. I agree. That's a liability. I agree. But what is happening there? Your paisa is coming in. No, money is coming in, right? So, nothing. So, it's an inflow of funds. You are selling, some assets. So, what is happening? Paisa is coming in. Money is coming in. So, it's an inflow of funds. Operational profits. Why I use the word operational profits? In this case, your salary. Operational profit means after minusing all my expense, whatever is left over. No, once I generate revenue, suppose say for example, I purchased for 80 rupees and I sold the same for 100 rupees. Now 20 rupees is my profit. So the 20 rupees is the inflow of fund to me, correct? No, because I generated it, right? So that there is one thing, decrease in working capital. This only we saw in the last MCQ. You remember, right? So that is called inflow. This I will explain with, in the further slides. All right. So it's an inflow of fund. Now, what could be the outflow? Ulta of it. When I repay the capital, that is redemption of capital, buyback of capital, redemption of debentures, when I am repaying my bank loan, when I am repaying any of my liability, when I am purchasing an asset, paisa is going out. Correct? No, paisa is going out. I am making tax payment. I am paying dividend to my shareholders. Correct? No, so all those things, paisa is going out. Money is going out. You're getting it. So then that is called outflow. So when you put these things in one place and when you draw a relationship, then that is nothing but funds flow statement. You are getting it. Now remember why I'm saying this is funds flow is not part of your financial statement. Remember that, because this I would have told it in the in your financial framework. You're getting it, because the act clearly said if it is a financial statement, what and all should be there? It should be balance sheet, it should be P&L, that is statement of income, and then equity, changes in the equity, and then others, notes to accounts, cash flow statement. That's it. So there, cash flow is mandatory. It is a part of your financial statement. Whereas funds flow, it's purely a managerial tool, management tool. You're getting it? It is not mandatory. It will not be prepared along with your financial. This will be prepared as a management tool to understand. That's it. Funds flow, it is not, funds flow statement is not a mandatory one. Remember that. You're getting it? Now, to prepare funds flow, what and all you need? I need, financials basically. I need it 2 year, because it is a comparison of 2 period. It could be, previous month and this month. It could be first quarter and second quarter. It could be anything, guys. It could be, last year and this year. Two period, two time period. So funds flow will talk about two time period. All right, two time period. So based on the information contained in the two time period, I will be preparing it. So here, when I say funds flow, I will be having one statement which shows me from where I generated funds, that is nothing but sources of funds, and where I utilized the same. So both should be equal. That is the thing. You're getting it? So that is called application of funds. Now, to prepare this, we need to prepare two more, statements. One is statement of changes in working capital, and one more is funds from operation. This one I am not going to talk more. Why? Because this one is similar. It's not similar. It is same. As much you talk about cash flow from funds operations, cash flow from the cash flow statement we have studied. No, funds from operation. The same thing. This is. You're getting it. When you see that, you will understand the format. This one I will explain. Statement of changes in working capital. Statement of changes in what? Working capital. That is very much required. Now I have given a tab. I mean, it is like a table. Remember this. When a liability increase, it is a source of funds. Just a minute, I'm having water. When a liability increase, it's a source of fund. When asset increases, it's an application of fund. Ma'am, how is it? Fine. Now, liability, so what it is? It is my loan is a liability? Yes, ma'am. Now, I am borrowing, 50 lakh from bank. What is happening? Literally, 50 lakh is coming into the business or not? I am raising the fund or not? So my liability is increasing because I have to repay. That's a different scenario. When you are repaying, it is a application, all right? So right now, so my liability is increasing because I took a loan. So fresh loan, I took 50 lakhs. So my liability is coming into picture. My liability is increasing. Or say, for example, already you have a loan of 10 lakh. Now you are taking a top-up loan of 30 lakhs. Now your liability is going up to 40 lakhs now. Correct? So now tell me what is happening here. 30 lakh paisa is coming in, money is coming in. So it's a sources of fund. You are generating that fund, correct? So liability is increasing, it means, what does it mean? There is a source of fund. I am generating fund there. It is a source of fund. Now take it ulta. All right, asset increases. Okay, so I have a machinery of already I have a machinery of 10 lakhs. Now I am purchasing, one more machinery which is worth of say 40 lakhs. Now total asset is increased to 50. Now total value is 50. So it is increased. Now understand what is happening. You paid that 40, you took that asset, correct? No? So fund is going out, movement is there now, utilized, you used that fund. So what does it mean? It is called application of fund. So remember this. So whenever liability increases, it is a sources of fund. All right. Whenever asset increases, it is an application of fund. Remember that. Okay. Now, before moving on to that working capital, please understand why. Because working capital is nothing but current asset minus current liability. This one I have already explained in the previous MCQ session also. Remember, every day in day out for my operations, how much I need fund, how much I need paisa to run my operations. Every day in day out, I no need that fund for purchase any asset, not required. I wanted to, meet my obligation of my operational obligation. Today I need to purchase, supplies for my shop. Today I need to pay salary. Today I need to make some payment to my vendors. Correct. So these are all every day in day out in my daily operation. Okay, so for that, how much fund I require? That is called working capital. Okay, so here I will not talk about my fixed assets. I will not talk about my investments, because that is not every day in day out activity. You are not going to purchase, every day. Suppose if you are a grocery shop owner, you are not going to purchase every day computer. Once you will purchase to for billing system, for billing purposes, you purchased one computer, that is fine, that's sufficient. You are not going to buy every day in day out, you are not going to buy computers, then that is not your fixed assets, it would become your tradable good. Correct. You are getting the point. Or you are not going to buy land in every day. Are you going to buy land every day? Are you going to buy machinery every day? Obviously, no. So those things are different stuff. Those things are called non-current assets. Nowadays we use the word non-current asset. Okay. So those things are not related to every day in day out activity. No. From there I will generate revenue. From there I will generate, everyday activity. That's a separate thing. You're getting it. So what is meant by working capital? Understand, every day in day out, how much money I need to run that business that day. That is called working capital. You're getting it. That is called what? Working capital. This is the theoretical meaning. Now what is a formula for that? Mathematical formula is, how do you find out working capital? Ma'am, I understood, ma'am, every day whatever, suppose today I need fund money to pay the vendor, to purchase supplies, to purchase raw material, to pay salary, to pay electricity bill, to pay rent. Yes, all these things are working capital. All these things are everyday work. Correct, no? All right. Now, how do you find out, ma'am, how much I need working capital? How do I know that what is my working capital requirement? For that, the formula is current asset minus current liability. The formula is what? Current asset minus current liability. Now understand what is meant by current asset and current liability. Asset is something that an organization owns. I think these things I have explained in the previous classes itself. I hope you remember. If not, you please go back and revisit those videos. I have clearly explained what is meant by an asset, what is meant by an liability. So you know the bifurcation. So current means within that accounting period, within that fiscal year. So which is basically less than 12 months. If something which is more than 12 months, then that would be treated as non-current. So why I am telling this here is, to prepare statement of changes in working capital, which is one of the statement that you have to prepare to find your funds flow, to prepare your funds flow statement, which is one of the requirement. Because to prepare funds flow statement, you need two statements to be prepared. One is working capital, changes in working capital, and another is cash flow, funds flow from operations, right? So to prepare statement of working capital, you need to know what is the formula: current asset minus current liability. So you should know, you should be able to identify what will come under current asset and what will come under current liability. Getting it? Now, statement of changes. So here, this I have given it in a tabular format. If anything happens to your current assets and current liabilities, how it will impact in your working capital. Whether it will increase, or whether do you need more funds or do you need less funds. That is the meaning. Increase in working capital means you need more funds. Correct. Increase in working capital. You guys, today I need only 100. Tomorrow, if I need 150, so then it is an increase. I need more fund. You're getting it. So increase in working capital means you are using more funds. So you're applying more funds. Your usage is more. You remember that? So increase in working capital. Decrease in working capital means it's a good sign that you need only lesser funds to meet your operational activities. So that is called decrease in working capital, which means you are somewhere you are generating some funds. You are sourcing some funds. You're getting it. So here I have given like a tabular format. If current asset increased, working capital will increase. If there is then ulta for decrease in current asset. If decrease in, so there is a direct relationship between the current asset and the working capital. Direct relationship. If current asset increases, working capital increase. If current asset decreases, working capital decrease. I'll tell you one thing. It happened in our organization itself. Uh, what happened? There's something called receivables, right? Debtors, something called debtor. Debtor is a current asset, which means I have sold goods on credit. Those guys have to pay me back. So those guys are debtors. So the debtors will be coming under current asset basically. what happened earlier, a year back in that organization, the debtors will take their own sweet time to make the payment. Okay, though we have a credit period of 30 days, but no one will pay, in 30 days. So because of that, what happened? If I make a sale today, it will take 100 days for me to collect that money. Guys, understand, I made a sale today. I sold a product today, but I will get that money for that product after 100 days. Remember, I sold the product, correct? Now I have to replace that product. I have to restock it. Have I received money from my customer? No. Then from where I will buy that? I have to infuse money. Correct. No, I cannot say, okay, 100 days after only they will pay. I will wait for their money and then I will go take that money, go and buy products and keep it in my shop. I cannot run business. You are getting the point. Yeah, so now debtors are keep on increasing, though I need more and more funds to run my operation. Why? Because funds are not there, but my stocks are getting depleted. You are getting it. My stocks are getting I'm providing services. I'm selling goods. I need to replace it. I need to restock it. I need money for that. But my debtors are keep on increasing. Those guys are not paying, or I'm keep on selling on credit. So obviously I need more money here. I need to infuse capital here. Then once I collect the money, then I can regulate things. Correct. So even in that organization also happened. They started breaking FDs to meet their currently needs. Why? Because they are not able to collect money from their debtors, their receivables, their customers, their clients. So because of that, what happened? They need money to meet because they cannot stop operations. They cannot stop providing services. They have to do it. So what they did is they started taking money from the investments. They sell some investments and then they'll put that money for every month expenses like that. Then what we did, we put a separate collection team and we formed one team, and we said you have to work vigorously on that. You have to collect as much as possible. Now what happened? We brought down to 57 days. So our debtors have reduced to a greater extent. And because of that, what happens? We are getting money from there only. So no need to infuse further capital. No need to break, FDs. No need to break the investments. So the need for capital reduced there because I am getting money from my customers itself. You are getting it. So once you get money from your customers, what is happening? Your debtors are getting reduced. So there is a decrease in the current asset. So this is the logic behind it. You are getting it. So if you understood the logic, if you are from a commerce background, or definitely you can understand. But suppose if you don't know what is meant by debtors, receivables, then please revisit the basic videos where we have explained everything. All right. So now there is a direct relationship between current asset and the working capital. If current asset increases, working capital increase. All right. Now remember, like ulta for liabilities. That's it. If current liability increases, then decrease in the working capital. The current liability decreases, then increase in the working capital. So there is an inverse relationship between current liability and working capital. You're getting it. So remember this tabular format so that it will be easier when you are solving the MCQs. All right. Now this is how your statement will look like, how you will prepare, working statement of changes in working capital. Here if you see, I have taken all the current assets and I will compare between these 2 years. Okay, this year and this year, how much it is, I will prepare. The same way current liabilities also I have put. So here current liabilities total, current asset minus current liability will become my working capital, right? This is the working capital for this year. Now, how do I find out increase or decrease in the working capital? So I'll compare two periods, right? This working capital minus this working capital, then it will give me whether it is increase or decrease. All right. So how do I find out current asset minus current liabilities? If I do, I will get the working capital for that particular period. So how do I find out whether there is an increase or decrease? I will compare this with the previous period and then I'll get to know whether I have any increase or decrease in the working capital, and that's how it will give you your statement will be prepared. Statement of changes in the working capital. Once it is prepared, then you will be preparing funds from operation. It is very similar. It is same as your cash flow statement. So I am not explaining this because this I have explained earlier. All right. Once you prepare these two things, here you will find out how much is the funds flow from operations. It can be either positive figure or negative figure. It could be anything. So you will be taking that into consideration. Remember, all right, so this if it is a positive figure, then it is a funds you generated from operation. If this is a negative, then you have lost so much of funds you lost in your operation. So that is the thing. All right, so once you prepare these two statements, you will be preparing the funds flow statement. So here you will be preparing sources, here you will park it applications, that is outflow. Then once you put everything, your this will be tallied. Suppose what happens in sums, basically when they are giving practical questions, you are supposed to find out the balancing figure. So like that. Okay. So now what could be the sources? Funds you generated from operations, sale of fixed assets, sale of investments issue. This I have explained already. So decrease in working capital. This I already told you in the beginning itself. So that will be the sources. Decrease in the working capital. Increase in the working capital will be treated as application, and funds lost, if the funds from operation is in negative, then that will be treated as funds lost in operations. Rest all these things you know. So once you put this two will be, it will be equated. You are getting it? In practical question, they will not give either this or this, and you will be finding it as a balancing figure. That's it. All right. Now here I have given the difference between the funds flow and the cash flow statement. Remember, funds flow, it's a broader concept than the cash flow. Why? Because cash is talking only about cash. Okay, but funds flow will talk about everything. Debtor, stock, all your current assets. But in cash flow, you will be talking only about cash. Okay. And here what is the source here? All right, here you will be comparing between two periods. Okay, two periods, and it will tell you where are the funds generated from and where are the funds that has been used. But in cash flow, you will be talking about opening balance, and you will be doing all adjustments to arrive your closing balance of your cash. That's it. Okay, getting it? Next, usage. So this one is long-term funds flow you can use, because working capital I'm studying, and I'm even seeing how much I purchased the assets, how much I sold. So it's like a long-term, I can use it for, it is not only for the current period, because I'm comparing even 5 years I can compare. You're getting it? 5 years down the line I can compare. For a 5-year period also I can prepare funds flow statement. You're getting it? So it's a long term. But cash flow, it's a very short term, because it talks only about the cash system, and it talks about the liquidity. Yeah. And now changes of working capital, it will be separately prepared in funds flow. In cash flow, it will be forming part of your funds from operation itself. It won't be prepared separately. All right. Now, what is the purpose here though? You will be studying what is the changes in your working capital when it compared to the previous period. Is it increase or decrease? But cash flow, just you're trying to find out whether my opening and closing balances are matching. You're getting it? In funds flow, even accrual, because in cash flow you'll talk only about cash. Non-cash item you just remove. But in funds flow you don't remove any non-cash. You will be talking about, even you will be considering all things. You're getting it? Even accrual basis you will be considering. You're getting it? All right. I hope you understood funds flow. I think it's a very small topic. So I think I've made justice for that. So I'll see you in the next class, all right, with the MCQ session. So have a great day tomorrow and have a good night's sleep today. Bye, guys. Thank you.